It is December 27th, 2023. It's the week between Christmas and New Year's, and this is my trade report for the day. Today is the day that I burned my 200K challenge account with FTMO after only about 6 sessions or so. Unfortunately, that's what happened, even though I only ended the day down $800. I still violated the maximum daily drawdown because of closed losses and floating losses. So let's take a look at those losses and see how they added up to be a day that I burned my account. And let's see how I could have traded it better and traded it differently. Okay, so here's what I'm looking at. I'm looking at GJ here, pound yen. I noticed on these black lines here, these are 1 hour pivots. So these are areas where price reversed on the 1 hour chart. Here, I'm going to put the 1 hour chart up here so you can kind of check those out a little bit and see where they are. So this here pivot happened last night about 8 o'clock. This one happened this morning about 3 a.m. And this pivot, which was a pullback and a jump up, happened about 7 a.m. So those are the main pivots that were marked here on the chart. There was also, I also put in this wick, high wick here that happened about in the 2 o'clock hour up at 181.86. So those are the lines that you see over here on this side on this 1 minute chart actually. So why am I looking at a 1 minute chart when typically I trade 5 minute charts? Well, that's what got me today. That's what got me today. So basically, when I saw this move, which happened at a little after 8 o'clock in the morning, it was basically a 1 minute chart where you had a strong push through a pivot, a pullback to that pivot, and a jump straight up from that pivot point, pretty much only visible on the 1 minute chart. I mean, you could see this on the 5, okay, and that's basically going to be showing right here, okay. But it's not, at the time that I saw this, I guess, I like to trade double bottoms, and I guess you could have said, hey, here's a bottom right here, bottom number 1, and then come up and then bottom number 2. That could have been something that you could say, but in the moment it didn't really look that way. And as I was looking at it, I'm like, man, that was a 1 minute chart pullback right there, and I missed it. So I'm not going to miss the next one. So the way I looked at it was that when price came back down again, okay, man, I can't stand it when it does that. Okay, when price came back down again, right here, I think it was, yeah, right there, it kind of bounced off that pivot line, and I'm like, here we go again. It's going to bounce right off that pivot line, the one higher, because it bounced off this one before, 181.63, and I was like, okay, this one 181.71, it's going to bounce. So I took it long here and immediately got stopped out down here for a loss of 18.19. Okay, so I'm like, damn, I was too early. Okay, so then I saw this big wick. Okay, and I'm like, okay, that's buyable. That's where it's going to bounce. So I bought it right about here because you got to pay a spread a little bit, and immediately came down, stopped me out just under the bottom of that wick. I'm like, dang, it stopped out again. So now I'm down 2,700, and I'm like, okay, well, I'll keep going. So at this point, I'm like, okay, I went short a couple times. That didn't really work out too well. Let me try it like one more time here, and try it one more time. Let's see here. What happened? Yeah, I went long twice. That's not working for me. Maybe what we've got is we've got a triple top against this level here. So I went, for some reason, I don't know what I was thinking. I thought it's going lower. It was trending down. That's what I thought. I saw this trending down like this. Okay. Trending down like this. One top, another top, coming down. I thought, okay, it's going to keep going down. Well, I went short right here, went straight up, stopped me out again. Okay, now I'm down like 3,100, and I'm not giving up yet. So I thought, okay, it's time to go short one more time. It's probably just, bouncing off this level. So I went short right here and kind of got scared out a little bit and took a tiny little profit of 210. Okay, well, at least I made a little bit of green. So I'm trying to figure out my next move here. And I thought, okay, well, I was still stuck on the short side now. Still stuck on the short side. So I kept thinking that this EMA right here, which was, I believe, the 15-minute 8 EMA, was what was in control. And not really realizing that, it was getting ready to turn. So I did take another short right here, and it kind of put me in the green a couple times right here. But eventually it took off to the upside, and I did move my stop. I was by this time overtrading the first 3 trades. I was taking normal lot size, and then I started bumping up to double lot size. So that was another problem. So I was overtrading and over leveraging, and only focused on the 1 minute, not focused on the 5, which is what I normally typically always try to focus on. And I'll show you, if I would have looked at the 5, I'll show you exactly what I would have been able to see. But let's just finish up these trades, because by this time I'm strictly focused on the 1 minute, slightly over trading, and definitely over leveraged. Okay, so I'm doing 50 lots at this time, where a real, even an 8 pip stop would be only 27. So typically, I really should have only been doing 21s, and I should have been trading on the 5-minute chart. But I'm doing 50 lots, and I'm trading on the 1 minute chart. So that just kind of shows you my mentality and how I was thinking and how I wasn't thinking. So anyway, I took this short right here, and then it stopped me out. Eventually, I kept moving my stop up. Eventually, it stopped me out up here. So then I'm like, okay, we're going long. And I even saw this strong push up here as a beginning of a move up, and that I even kind of had the wherewithal to figure that this would be a pullback trade. And I actually got in right here as it was pulling back. And then it went up a little bit, and then it just kind of came back and stopped me out break even, because I moved my stop to break even way too quickly. So obviously that was a really good entry, as you can see where it went up to. So anyway, I'm out. I'm watching it run without me because I moved my stop too early to break even. Super frustrated. By the time it got up to this high up here, this high level where this other pivot was, I was completely out of my mind. I wasn't thinking of anything clearly, and I just thought I'll short it at the top. Well, of course, that didn't work. It broke through, back tested, kept going north. Of course, I've over leveraged, so even just a small little push up, 6, 7, 8 pips, and I'm stopped out. So at this time, I'm like, okay, well, long is the way to go. So again, 50 lot, long right here. And this time I held on. This time I kind of got away from it moved me away from my entry fairly rapidly. It was a big burst of buying right there. And it got me away from my entry. As you can see, my entry was here. Got me away from my entry very rapidly. And then I just kind of sat on it while it jiggled around for a while and rode it all the way up to this level. I had a target up here a little higher, up here at 182.30, or a little under, about 182.25, I believe. It got up to 182.18, so within 7 pips of my target, and put in a seller's wick, and that's when I got out. This one I actually made 79.95. So that was a pretty decent trade, I thought. And basically that made back almost everything I lost in all the other trades, except for about $800. So on a 200K account, an $800 loss is like nothing. It's like half of 3/4 of a point. I don't even know what that is. That's like, it's not much. It's like a third of 1 point. So it's really nothing. However, I did violate the max daily loss by about $500, because they take closed losses with floating losses, add them all up, and I violated the max daily loss. I burned the account. So here's what I should have, could have, and would have done differently if I'd been thinking, and what I will do from now on. I'm pretty sure I will. I'm just sure going to try to do this way from now on. So everything the same. Okay, 5-minute chart. I'm going to go back to an unmarked 5-minute chart. Here's today's price action with all these trades. Here's how it should have played out for sure. Let's see, it's Wednesday today. Yeah, Wednesday, 8:30, 9:30. Okay, here we go. So the way to do this is stay on the 5-minute. Okay. Wait till the 9:30 volume comes in, and then find a 5-minute double bottom pattern. Okay. Now, the way I look at double bottom patterns is maybe different than the way some other people do. This particular EMA right here is a 1 hour EMA. Now, I'm not saying that I'm always going to get 1 hour EMA double bottom patterns, but even if I had the 15 on, which is the other one I like to kind of try to keep on there, which I don't know why it's not showing right now. Okay, there it is. All right. So, but the thing is that there's no double bottom pattern that formed really against it. So basically you had a pivot here that it came right down to the pivot, and it came down an apex of the 1 hour 8 and the 15-minute 20 and this 1 hour pivot. So it came down there on the 5 minute, bounced off at once, came up, came back down with a red candle. It's just a color change. Just looking for two color changes here. Looking for basically two bounces. So we had this bounce number 1, came down with bounce number 1, came down again, another red candle, and bounce number 2, and basically you're good to go. Now you can take it long at this one right here, or you can wait for a bigger 5 minute candle and take it long right here. Either one's fine. Either one's fine. And then as far as the lot sizing, don't over leverage. Just do the regular, 10 pip stop loss, which is about 21 and a half lot size. None of this 50 lots like I was doing, and just ride it up as long as you can. Ride it up just the same way I rode up the other one. And that's really all that would have had to have happened. It's a very simple double bottom, a 5 minute double bottom pattern, and it's off the pivot and the 1 hour 8 and 15-minute 20. Both. Right off of that, boom, 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 get long here, long position here, 10 pip stop or 12 pip stop down here. A 10 pip stop would have done fine, 11 pip stop, something like that. And just take it up for, 3.5 hour, 3.5 hours fine. With a 2K stop, it's 7,000. And that's just that simple. As a matter of fact, it's set up again here. This one was against the a 1 hour 20, I believe it was. That's a 1 hour 20, yeah, green, okay. And this was another pivot line down here, 1 hour pivot. I'll show you that one. That one's at 181.53.9. 1 hour pivot, 181.53.9. That one's this one right here. That's based on this one, I believe. That's where I got that one. Yeah, I think that's where I got that one. Pretty sure. Should have been actually a tiny bit higher. If you go back to the 5, it should make sense there. 53.9. 55. Now it's 55. Yeah. Okay. Well, anyway, yeah, it's right in there. It based above it and wick down here. The body above, wick below at the 20. And there's a 1 bounce, and there's 2 bounce, and up it goes, right? Up it goes. Nice up, up, up. So that's basically the two trades that were on the table today, the two 5 minute double bottom patterns. If you look at MACD and RSI, they kind of make sense. On the first one, MACD was above the 0 line, and it was on the way up, back up again. If you're looking here, or at least it flattened out. And this one was, it went down to the 45, and by the time the trade set up, it was right up here about 61. We like to get it above 55, so that made sense. And it went up nicely, and so did this one. This one triggered at either 11:45, or you could have taken it at 11:50. That was a bit of a doji there, and that might have shaken you out. But I've learned that these spinning top dojis also could be looked at as a double bottom continuation pattern, because when you look at it on a 1 minute, again, I'm not saying to look at it on the 1 minute, but when you do, you're going to see that it looks like a double bottom continuation pattern. So it kind of has that look to it. So I don't know, maybe that one doesn't so much, but you can see all these buyers wicks here and taking it higher. So anyway, long story short, made a lot of mistakes today. Should have been solely focused on these 5 minute double bottom patterns off a combination of the pivot and a key EMA, which in this case was a 15-minute 8, and the 1 hour 8 and the 15-minute 20, and that was a nice double bottom pattern at the Open, at the New York Open with that nice open volume. And then once again, a couple hours later, 11:45, 11:50 for another nice trade up, and not over leveraged. Keeping a reasonable 10 pip stop with a 1% 1% R unit with 10 to 12 pip stop, 1% R unit, 2K. Doing that would be, let's say, let's call it a 10 pip stop. That's 21.6 lot, or a 12 pip stop would be an 18 lot. So something in the 18 to 22 lot range for 10 to 12 pip stop would be fine for this. For example, this one, let's say you take this one about halfway through this candle, after you've got your two greens showing up, your double bottom pattern is formed at 66 by 56 down here. So it's plenty of room for this trade to play out. Same here. You can take this one after the second green in that double bottom pattern, and that's 76 down to about 66. Yeah, under that candle. You could even go 64 with a 12 pip stop, something like that. That's 18 lot. Anyway, that's all it really takes. You just got to get off the 1 minute, stay on the 5, and you'll see the patterns form. Do it at key times, when key EMA levels and key 1 hour pivot levels and key times a day. Make sure your RSI is pointing in the right direction. Here it was here, and here it was here, pointing in the right direction, pointing up at the midline or above the midline in this case. And that's pretty much all you got to do. Just don't focus on the 1 minute. You just won't. It might work sometimes. Like where you see something like bounce off something on 1 minute, but it's not really sustainable. It's not high percentage. It's it worked here, for example, but this is so much better. This kind of pattern here, this kind of pattern here, these work so much better. And you can see them on a 1, but you have to be really knowing what you're looking for, and you have to be really disciplined to wait for them to play out and get to where they need to be. Whereas if you just put it on a 5, it's just so much easier to recognize. You can see it's so much easier. You can just see that come down, bounce, color change to green, color change to red, and then color change to green again. 2 color changes to green, you're good to go. Okay, color change, big red comes down, color change to green, color change to red, color change back to green again, and you're good to go. 1 or 2 candles. Preferably waiting for like a strong candle, but the advantage of that is it's more conservative, and it really shows you that there's oomph there behind the push. The disadvantage is that it's just not, it's not really fully formed yet, and it's not for sure that it's really going to go. But in a lot of cases, it just takes that second color change to green to tell you that your double bottom has formed, especially if it's forming above a key 1 hour pivot and a key EMA level, which the 1 hour 8 is really nice. And so that one was and it's nice when it closes above some EMAs, and most of your EMAs, like this one did and this one did. So waiting a little bit longer on the 5 minutes sometimes can really pay off. Don't wait too long. I mean, one way to do it is you can get your second color change to green, and then take up the next one about halfway up. That's one way of doing it, because you can see in both cases it really rocketed. A lot of people piled in after that second color change to green. So if you don't want to wait for this one to fully form and miss out on all this profit right here, then you can just take it above the wick. Like right about as soon as it goes above the wick. That could be a good place to get in. Stop under this swing low, that kind of thing. This one would have yielded, if you could have hung on through this little pullback here. That one's a 3.4, and if you would have gotten in about middle, just above this wick on this one yielded quite a bit, 4.86. So those are a couple of really easy trades. I think they're easy. In retrospect, they're easy, but even if you are committed to looking for what you're looking for, like the double bottom 2 color change pattern on the 5 minute against the key 1 hour pivots and the key EMAs, then within the proscribed period, 9:30 to say noon, there's no reason why you can't get those and profit on those really nicely. So anyway, that's it for now. I'll be back at it very soon with the next challenge.